Hi folks, David Waring here again with InformedTrades.com and today's lesson of the day. In our last lesson we looked at the basics of charting patterns and two of the more common patterns you find in the market, double tops and double bottoms. In today's lesson we're going to look at a specific strategy that many traders use to trade these setups or these charting patterns, complete with specific entry and exit points. So let's get started.
Okay, so as we've learned in previous lessons, the double top and the double bottom are signs that a financial instrument has failed to break through a specific level, considered resistance on the double top side and support on the double bottom side. So because of this, they're considered reversal patterns, and where traders will look to these patterns or place a lot more significance on these patterns is when they're occurring as part of an uptrend on the double top side and as part of a downtrend on the double bottom side. They're going to look for, when they see a double top in an uptrend, they're going to see that as a signal that the uptrend may be coming to an end and look to possibly trade that reversal. When they see a double bottom in a downtrend, they're going to look to that as a signal that the downtrend may be coming to an end and look to trade the potential reversal there. So let's start with a basic strategy for trading the double top. You can see the double top here forming our resistance level. The middle of the 2 points there, referred to as the trough, is considered our support level. And so traders are going to wait. Traders commonly wait for the market to pull back and break below that support level as a confirmation that the double top is actually in place. So they're going to wait for the break there, and then they're going to enter on that break, and then they're going to measure this move here, the bottom of the trough up to the top of the 2 points, and then that is going to be their profit target. Okay, and then the stop loss is placed just above the second peak there. So a fairly basic strategy, but one that is commonly used to trade double tops, and one that you may see potential to use fairly often. A second thing which traders are going to use for confirmation here is volume. I don't actually have volume on this chart because this is an FX chart, but if you're trading futures or equities, you would have volume available, and they're going to look for a decrease in volume on the second peak, indicating that the buyers there driving up to the second peak were not as strong as they were into the first, and then an increase in volume on the break of the support level there, indicating that that's a true break. Okay. Double bottom strategy is the mirror image of the double top strategy. We have the double bottom in place here. We have the peak between the two double bottoms as our resistance level. We are waiting for a break to enter on the break of that resistance level is the common strategy. Measure the move there, measure the difference between the peak and the middle of the two troughs, or sorry, the highest trough and the middle of the peak. And you get 174 points in this example. That's the profit target. Stop loss placed just below the lowest trough in the double bottom. Okay, and again here looking for confirmation from volume. If you were looking at a stock market chart, a futures market chart, you would look for falling volume on the second trough that forms the double bottom, and rising volume on the break of the resistance line. Okay, so you should now have a good understanding of one possible strategy for trading tops and bottoms that is commonly used in the market. In tomorrow's lesson, we're going to go into something which is known as head and shoulders, which is another charting pattern, and lead into a potential strategy for trading that. Okay, so starting to get a little interesting now with the trading strategies. Be careful when using these. A lot of practice, and make sure you understand exactly what you're doing. As you know, the financial markets and trading in general is very risky. You should only trade with risk capital. Money that you can afford to lose, and there's no system or strategy that's going to win all the time or that can guarantee profits or anything like that. So make sure you do your homework. As always, if you have any questions or comments, please feel free to leave them in the comments section below, and have a great day.